Hi, my name is Andre Little with Capital Group. I'm going to show you how to use the home appreciation calculator on our website. You're probably visiting realestateinvestmentsfirm.com. So the home appreciation calculator here is going to begin to show you how real estate appreciates and grows over a period of time. On this page here, you're going to see a long video production as far as housing predictions for 2019, about an hour long. This one here is a video about a minute and a half, telling you about how a lot of our investors are getting real estate no-doc loans. Basically, the employment is left blank. The income section is left blank as well. Closing like 14 days. Matter of fact, the down payment can come from somebody else. This here, of course, many of you already know, this is Warren Buffett. Says that basically, if he could, he would buy a lot of single-family homes and invest in those. May not be an unwise choice to listen to what Warren Buffett says. So the home appreciation calculator, this is it right here. I want to try to use it properly. Sometimes I think people may put the wrong data in here and don't know how to use it. But I want to begin to show you how to use this here. So what I'm going to do is go down below, and I'm going to talk a little bit about what's on the site here. This is the form you want to fill out. You want to get a specialized report for your specific market for your area where you reside. Remember, I tell you the real estate should not be invested on a national area or a regional area or a statewide level. Real estate is invested locally. A lot of information here is called the real estate report card, which I'll give you specific to your area if you fill out the form right here, which will be very beneficial to you. I would not want to do it if I were investing in real estate without it. This here is a pretty much state map of all the areas of real estate that's been appreciating and growing very well. You see all the green state. This is a statewide. Remember, you should not invest statewide, though. It should be locally. This here, now we get into the numbers here, the data. As far as the top rankings for real estate, this is based on Q3. So this is basically from the time of going from the third quarter of 2019. I will be updating this very shortly for the last quarter of 2019 because we're now on February 2nd of 2020. I'm not sure if you noticed, but this is the first time in 999 years where you can actually say the date forward and backwards be exactly the same. Well, let's pick a location here. I'm going to pick Florida. Before I pick Florida, I wanted to show you, this is showing the top 25 states, and it also goes to the U.S., and it goes for the last 25. Now, let's go here, just showing you here for Florida, because that's where I reside. We're ranked number 6 in the country as far as last quarter of Q3. Showing here past year, 5.2%. Last 5 years, 39%. Last 10 years, 30.1%. Last 10 years less than last 5 years because we were coming out of the recession. So I'm going to go here. I'm going to use 1 year, 3.9% for the state of Florida. 3.9%. Let's go back up to the calculator here. And I will put in here 3.9%. One for 1 year period. I'm going to put the initial investment value will be $300,000. Shows the property here will grow to $311,700 here after 1 year. If I go to the advanced mode, it shows the difference of $11,700. Total growth rate 3.9%. That's for 1 year. Now, what I want to do now is begin to show you how to use this calculator for real estate grows over a longer period of time. And with that being said here, I want to show you now if you go to the 5-year period. 5-year period for Florida. Come over here. 39%. It's going to use 39% for 5 years. This is where some people get confused on the calculator here, but I want to make it very clear how I use this here. I'm going to put 39%. And I'm not going to put 5 here. This is not a compounded daily calculator here like you would if you invest in stock in the market here. You've got to use this very simplified here. So I'm going to put 1 period. It's a 5-year period, but it's 1 period I'm going to put there. Initial value started out at $300,000. So now the profit grew to $417,000. So that's $117,000 for one real estate investment for over a 5-year period. Not bad. And that means if you avoid 10 of these properties, which I always do with my investors, how to leverage it, we get you the money, we finance you, and we try to begin to build a real estate portfolio up with us. And this would now be $1,170,000 instead of $117,000. That's the benefit of leverage. Now, what I want to do is show you here, you cannot go off of what you hear on the news. The news is always going to report this data here. The USA third quarter, 2.5% real estate still growing. Last year, real estate grew just under 3%, 2.9%. Last 5 years, real estate 21.8%. In the last 10 years, 14.2% real estate. Well, let's go through this here. Let's go here. Vermont in the last 10 years. Let's go, I want to go back and show you something here. So what I want to do is go to, let's go to, shows real estate grew 14.2% for the last 10 years. That was coming out of a recession. Well, Vermont didn't grow. Vermont, the last 10 years, is minus 4.2%. Alabama, minus 2.9%. Mississippi, minus 3.5%. So when they tell you this figure here, it doesn't apply to those locations. Let's go a little further down. Connecticut, minus 15.1%. West Virginia, minus 2%. Delaware, minus 8%. Illinois, minus 7%. Maryland, minus 4.5%. And of course, Puerto Rico, you definitely don't want to invest there, minus 36.6%. So you cannot invest in real estate on what you hear on the news, on national or local news about the data here. It's skewed. You cannot do that. Real estate must be invested in a local market. And it's got to be off of local data. Now let's go forward here and let's talk about some of the states that show here that did 14.2%. The U.S. Well, let's go and look at some of the other states here. The state that did the best over the last 10 years in the U.S. is Nevada, 44.2%. Out of the desert, last 5 years, 48.1%. Actually, one did a little better than Nevada is actually D.C., the nation's capital. It's incredible what's taking place here in D.C. So all the politicians are buying the property around there, and they are actually riding a huge wave there. It's not just coincidence, but just for you know. But it's very much an area that's not very affordable. Colorado, 46% last 10 years. Some people are linking this up to the legalization of marijuana, but that's another graphic, another chart, another day. Now, what I want to do, this right here shows you all the states in the United States of America, and it shows you here what the growth rates are. Green, of course, is good, and it's green, but it's statewide. You cannot invest statewide. You cannot invest regional-wide with MSAs. You got to do it local. And so let's go a little further here. It's called the real estate report card. What I want to do is send you a personalized real estate report card for you, for your specific area. I want to begin to help you and give you information and knowledge to give you an advantage of investing in real estate and not go by what the crowd is doing. I always try to say, stay out of the herd, because many times the herd is going to get you hurt. You got to be ahead of the herd, just like ahead of the curve. Now, complete your name, email address, contact number, and tell me basically if you're interested in investing or what amount of money you want to invest, what area, community, state, county. Let me show you how this right here works, the real estate report card. I'm going to go over to our software here. Keep in mind, a lot of our software is used by a lot of PhD economists out of Harvard University. Some very smart people that build some algorithms and things that we use for our data. Now, I'm going to use a local area, not too far from where I live, in Orlando, Florida. I can use MLS, I can use an address, I can use county, I can use zip code. I'm going to use zip code. I'm going to go 32801. It's pretty much downtown Orlando. Areas we might know as Lake Eola. I'm going to go and it shows there it's Orange County, pulled in already. Median home price, $291,557. Remember I said the average price when we're going to buy $300,000. Historical average over 60 years is actually 4.78%. 10-year average 3.59%. 5-year average 9.88%. Then it shows here going forecast 1 year 1.86, 5 year 17.31. Now, this is going to forecast here. Remember, what I didn't do last time here for you was show you pretty much, well, I think I did, but going back over here, 39% for that period there shows that that property there at 39% what it would have grown to. And so now on this chart here, it's going to break down even more data. What are the demographics people are investing? What actually, the number of people who are renters, how many of those can actually afford? This shows housing formation, so how it's been built. This gets you involved for us, housing demand, why we don't have inventory. It goes in unemployment rate, affordability index. All I do here is come over here, I download it, export it, send it to you via email to have specifically for your market there. But I'd like to change something even more so. This is what I want to go into called specific appreciation for that particular community you might want to invest in. Starting home price. Let's just say that you are going to invest in a home up there, $500,000, and I'm going to say that you are putting 5% down. This may be a home that you're going to buy as an owner-occupied. Closing costs are going to run you about $20,000. The amount is you want to invest in 10 years. And I'm going to say that you're going to invest in, let's pick Colorado. If you invest in Colorado, let's go in Boulder, Colorado. And I'll leave it there. It shows here 3.5% forecast appreciation, 5.72 historically. This shows here basically that home for $500,000 after 10 years is worth $872,000. Cumulative appreciation after closing costs will be $352,000. Remember, you're going to sell the house after 10 years, so that's yours. Now, this is what's staggering. It shows here that first 2 years, you haven't made any return on your investment. After 2 years, you're what I call in the money. This shows here the growth rate over 10 years. The return on investment will be 1,408.2. That's a 1,400% return on investment. This is why you want to invest in real estate and use the term we call leverage. Other people's money. Let us get you the loan. Let us begin to get you the capital to begin to invest in real estate. But not only that, we're going to show you the best markets to invest in. And also, you may be invited to be a part of our real estate equity fund group, where you can be a passive investor. We do all the work. You just share all the benefits of potential investments here. Now, keep in mind, I want to share with you is that we have data from all over that is showing the hottest markets in the country and how things are shifting. So we look at the last 10 years, 5 years, year, quarterly. But we look at trends to see where markets are heading right now, which is what you want to begin to focus on too before you begin to invest. Now, in 2014, the great state of Florida became the third largest, most populated state in the United States of America. Yes, we overtook the great state of New York. So now it is California, Texas, Florida, third most populous state. Now, why is that happening? Well, those baby boomers now are retiring, and they're retiring to warmer climates. It has always been projected and predicted that Florida will become the next California, where basically what that means is that the affordability is going to be very challenging in the state of Florida in the next 10 to 15 years. So now's the time to buy in Florida to ride that wave out of all the demand that's been created here. Let us show you how you can begin to invest in real estate and grow wealth over a period of time. On that note, I want to thank you again for allowing me to share with you how to use the Home Appreciation Calculator, how to begin to grow wealth in real estate. My name again is Andre Little, and I want to thank you for the opportunity for investing on behalf of the Capital Group Real Estate Equity Fund. On that note, have a wonderful day, and hope we'll hear from you soon.